take a look at this chart and tell me in the comments, do you think we are going up, down, sideways? Now, I've purposefully left off all identifying factors. We have no dates, we have no ticker symbol, we have no price. All I've left are simply the indicators that I like to use. Bollinger Bands with a 20 SMA. We've got our 50 EMA. We've got our 150 EMA. I've left on the volume and also one of my favorite trading indicators, the stochastic RSI. Now, before I show you what chart this is and from what period of time, just simply put it in the comments. We're going up, we're going down, we're going sideways. Doesn't matter if you're wrong. Doesn't matter if you're right, even. Put it in the comments, and then I want to show you the chart. I want to show you exactly where it's from, and let's walk through how we can read this chart to help our trading. Now, if you guessed that this chart was from the SPY, and if you guessed that we probably have some downward momentum, we're on the same page. So the chart that you were looking at there and are looking at now, it's the monthly SPY. And if you said, I think there's downward momentum, I agree. What I want to do is, on today's video, just show you areas that I'm looking at, show you how I'm trading this and how people inside of my mentorship have been really profitable over the last 2 to 3 weeks with this one particular strategy. Heads up as well, if you're interested in my mentorship, new round is starting as of Monday. There's a link in the description. There's a couple of places left. So take a look if you're interested in kind of learning more about a lot of this stuff, right? The way I trade, it's very much, let's block out the noise. Let's block out the hype. Let's block out as much of the emotion as possible. And let's just see what the charts are telling us. There's no emotion in this thing, right? But there's a lot of emotion when you're watching, say, YouTube videos and you've got someone screaming, we're only going to go up, or we're going to drop down, another percent or two, then we're going to go up. Or it's all doom and gloom, we're crashing and it's all over. Like, it's hard to trade when you're stuck in that moment. But when all it is you and the charts, it gives you a lot more power and it gives you a lot more clarity and certainty to back the trades you make and to pick the right ones. So that said, let me walk you through kind of what I'm seeing. So firstly, I started to get nervous on this chart when we topped out on the stochastic RSI up here, kind of through January, even heading into January, and we weren't making new highs and we weren't getting real strong candles, right? Like none of these candles are strong. What's a strong candle? Big, beautiful, solid green. Big, 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 big. Big, 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 beautiful candles. And then we stop making them, right? So that firstly makes me a bit nervous. But what's super worrying right now is this turn of the stochastic as of February, okay? What typically happens when a stochastic turns? Reaches the bottom, right? The last time we had a big turn down on the stochastic was through March and April of 2025. Tantrum for tariffs. When was the time before that? The bear market of 2022. Now, no one knows how this ends, right? We could very well turn up in the next month and start our rise back up. But I'm planning for that not to be the case. And the reason why I'm planning for that not to be the case is what's happening in the world right now. Okay? We are staring down the barrel of huge inflation from this war. What does huge inflation mean? That means high interest rates. High interest rates, not good for the stock market. That's coupled with high jobless numbers. That typically is not good for the economy. And when you combine the two, it's a story for another day and something that we can deep dive in on another day. But when you can combine high interest rates and high jobless, you end up in a period of stagflation. Worse than inflation, worse than deflation. Think 1970s. Just have it in the back of your mind, right? So here's what I look at on this particular chart. And I'll go through some different time frames as well. So to kind of show you how I think through it and how I use different time frames. So if I'm looking at the monthly chart, I'm actually eyeing off this, call it 600-ish level. Why? Because that was our previous resistance. And what do we do with the resistance? We often, not always, we often test it as support. It would also mean that we've retraced back to the 20 moving average, which we haven't done since April of last year. All right. And typically in a bullish market, that's what we do, right? We rise, we test, we rise, we test, and we can continue in that kind of manner for a more extended period of time because we're getting these short pullbacks. We can continue the upward momentum for a longer period of time. But we haven't had that much at all, realistically, since end of 2023, bar literally, call it 3 months, right? So that's what I'm looking at as my first worst case scenario if I'm looking at the monthly chart. Now, remember, it doesn't mean that we just crash straight down there overnight, right? We ebb and flow. We go down, we go up, we go down, we go up, we go down, we go up. If we look at the daily chart kind of highlights that, right? And this is when I like to zoom out and go to higher time frames, is when charts are starting to look like this. It's hard to look at this chart and get a real good picture of where we might go because it's just so condensed. That monthly chart, this has much easier structure to look at than the daily. But let's take a look at daily and see where my most current areas of watch are, okay? Firstly, of course, the daily 150, all right? So in order to at least hover around this area for a little while, we need to hold this daily 150, and this is probably going to get tested in the next trading week, I would imagine. Now, stochastic RSI, yes, we're kind of low, but this very easily drops back down a little bit and actually bottoms out. So I kind of think that we might do a little bit of that. Do we get a bounce back up? Probably. Where would a bounce take us? Well, this was our previous support level. So what we want to do this week, we can potentially reclaim this, right? If we reclaim this, then maybe we come back up here and retest this 50 EMA. But I think that we're probably knocking on the ceiling of around this 677 level and this 150 EMA. What happens if we lose the 150 EMA? Then we look to the next level of support, which likely is somewhere down around this sort of 650-ish. Might we find something beforehand? Sure. Maybe through here, but I'm kind of putting this at the same level as that 150 EMA, right? Give or take a few dollars. Support and resistance are areas, not round numbers. So I'm looking at this potentially down here, 650. Now, the other thing I like to look at is, okay, if we get to 650, what does 650 look like on one of those higher time frames? Because right here, as far as moving averages go, I mean, even if I was to turn this 150 into a 200, we'd be a little lower than that. So we're probably going to have a bounce somewhere between that 200 and down to these previous lows here of, call it 653, right? So if we're looking now to the weekly time frame and we're looking for what happens on the weekly time frame between that 656 and 652-ish, It's got that same level of support. Obviously, we would expect that. But the 50 EMA is just a tad lower. So I would then even expect that maybe we test a bit lower and we kind of kiss on this 50 EMA, which would then also potentially be, if we drop it down, that's this sort of area here, right? 50 EMA, this area of resistance before. Okay. What does that look like on the monthly? On the monthly, it's kind of no man's land, right? So they're my areas that I'm looking at first. If we lose then this space here, this sort of 650-ish, I don't think it'll happen next week. I don't think it'll happen, right now. But then, of course, we just go through that cycle again of, okay, on the daily, where might we find support? On the weekly, where might we? And then on the monthly, where might we? So at the moment, that's kind of what I'm looking at. So how have I been playing this? Let's come back to the daily, because actually placing trades is helpful off of the daily, I find. Let me show you. I'll link a video below to show my SPY spread strategy. And this is just what we've been playing in my mentorship over and over and over again. Both sides, the put side and the call side. The cool thing is with these trades, we're in and out of them really, really quickly. We get our profit, we recycle it. So what I'm not doing now is entering long dated options contracts. I'm doing 2 weeks at the most. I thought here on February 27, you can see I entered one for March 20. I thought, you know what, I might just see what it looks like that far out. And I actually don't love this trade right now. So everything I'm doing, I'm pulling the time frame in, because when people say it gives you more time to be right, it also gives you more time to be wrong. And with that more time to be wrong as well, time is on our side when we're selling options, right? The more time whittles down, the more profit we get in our contracts. So what I find is that with those shorter dated up to 2 week contracts, I can get in and out really quickly, even if the stock kind of moves against me a bit. Okay. So what am I looking at? So of course, for my puts on the down days, that's it, the down days, I'm entering my put spreads as far away from the current trading price as I possibly can for a return of around about 10%. I do a $10 wide spread. I look for about $100, give or take. I mean, you can see over here, 99, 97. This one here, 38. I did it purely because I could, right? I actually didn't have a put spread on for this expiry of March 6. And essentially, I could put one on for free because I had the call open for the same expiry date. So it was a quick 4 days technically, March 3rd. Remember, I'm Australia. I live in the future. Technically, that's March the 2nd. However, I was able to put it on for a small amount of credit because why not, right? I was happy with this level. There's a few days to go. I'm not putting any more risk into the trade as far as monetary risk goes. So I may as well get that extra $38 odd. But yeah, as you can see, I hover usually 80 cents to, I mean, this one was up to $1.27. You get the gist of it. But the key is down days, significant down days that looks like maybe this might be a bottom point. We enter, we get as far away from the price as possible. When do we enter our call contracts? When we're butting up against resistance that we're not getting through. Here. What do we do on that? we go out as far as we can to get that same amount of credit. The one word of caution: when you're going as far out as you can, you're still looking to stay either above the level of where you expect resistance to be. So you're staying above, for example, these levels, or potentially this high here might become our next point of resistance. You're staying above. Same with your put spreads. You're staying below where you think that the next level of support might be. So I hope that video was helpful, just to show you, you know what, zoom out. This is the strategy that I've been using, short dated because I don't want to be in anything for a long time right now, and playing the call side. Playing the call side means that you're protected when the market drops, and there is nothing better than waking up on a day like today and seeing profit already banked in your account because your closing orders took because the market dropped. You're like, kind of magic, right? Market's dropped and you've got profit. Amazing. So yes, in short, always just zoom out and just look at the charts for what the charts are. Don't try to put someone else's story on it. Don't try to make up a story. Don't try to justify why we might go up, why we might go down, because all that does is it keeps you in your head and it keeps you from making good decisions. That's why I love the charts oh so much, is because it just keeps me following the money, following the momentum. And right now, the money and the momentum is kind of drifting away. When that changes, of course, then I'll change and then we play to the upside. But yes, I hope you all had a wonderful week trading. Have a beautiful weekend. If you're interested in the mentorship, like I said, the link is below. All the details are there. There's an email address on there. Also, if you've got questions, feel free to reach out. But we are starting on Monday and we're going to be doing a lot of this kind of stuff because this is what keeps you profitable. You don't need to know the strategy is easy, right? Knowing how to place the trade is easy. I don't need to teach you how to sell a put option or how to sell a call option, but to be able to learn when to potentially get in for the best return, how to protect your trade along the way, all of that good stuff. That's the fun stuff. And that's what we're going to do a lot of.